So what the heck is going on in the mortgage markets? And if I'm looking to buy a house, is now a good time to get pre-approved for a mortgage? Hey everyone, Steve Jamrock with Realty Executives Premier. Over the last couple of weeks, we've seen some significant changes in the mortgage industry that could affect some buyers' ability to obtain a mortgage on a property. What started out in the government-backed mortgage area, the FHA, the VA, the USDA loans, has slowly crept into some of the larger lending institutions on the conventional side as well. Recently, Chase Bank came forward and said that they're only working with new borrowers if they have 20% down and a minimum of 700 credit score. Now, we'll get into Chase Bank here in a second, but I can assure you that's not standard throughout the entire industry. There's still plenty of lenders out there that are willing to work with buyers, but they are tightening up the standards. And why did that happen? Well, there already was some uncertainty with the volatility of the financial markets and the uncertainty in the unemployment sector, but then came the Government CARES Act, which was good intentions of helping out Americans through all Americans. But they added in the mortgage forbearance program, which allows those who have mortgages to hold off or delay their mortgage payments if they're facing some financial uncertainty. So they can delay for up to 3 months at times of not making a mortgage payment. So how does that affect you and the mortgage markets today going forward? Well, what happens is when you go and apply for a loan with your local mortgage company or bank, they are called your loan originator. So they're the ones that start your mortgage process. They get you through the whole home buying process and get you through closing, and you have your new house. And then that loan originator who started the loan process with you, the majority of them turn around and sell that loan to an investor, which is known as a servicer. Those servicers actually take care and maintain that loan. They make your insurance payments, they make your property tax payments, your mortgage insurance payments, etc. They're actually servicing your loan. Now, those servicers are investors, and they typically buy hundreds of loans and then pull them and sell them to a larger investor. So why does that all even matter to you? Well, what happens is they collect your mortgage payment and in turn, again, pay off property taxes and insurance and then take that payment and pay their investors. Well, when the mortgage forbearance program came into effect and people started to delay mortgage payments, those servicers started to struggle with liquidity and not having those payments readily available to forward over to their investors. So now servicers are taking a step back and saying, whoa, wait a second. If originators, if we're going to go ahead and buy your loans, we need to make sure that they are not a risky loan. So we're going to stop taking chances on anything that we deem risky. So right now, for you home buyers, how this affects you is that there are still local banks that are willing to work with you. No doubt about it. There's still homes being sold, loans are still being originated, closings are still happening, but there are stricter standards in place. It's affected the larger banks like Chase Bank more because they own so many loans. So a lot of the local lenders are still in business and ready to help you out here. So some of the tighter standards, though, you can expect are your credit score being one of them. Anything under a 640 nowadays is going to be extremely difficult to get approved. Most lenders are going to tell you that, hey, take a step back. Let's work to build up your score up to a 640 or higher before we even get the process going here. Number two, you're going to be looking at a lower debt to income ratio. And number three, they're going to be stricter on your employment verification, even possibly requiring letters from your employer stating that you are still in good standing and there's no changes coming here in the near future. So again, why things have gotten tighter and maybe even a little bit more difficult, there are still plenty of lenders out there that are willing to work with you with lower down payments and to get things done and get you into a new home. So again, a little bit of this is confusing, so if you have any questions, please don't hesitate to reach out to me, Steve Jamrock, Realty Executives, 219-306-0333. Be glad to talk you through it or hit you up with one of my preferred lender partners and discuss that in further detail. Thanks again for watching. Stay healthy, stay safe. We'll talk to you soon. Have a great day.